Good morning. My name is Sonora Monks, ESA's Director of Programs and Education. Thank you for attending today's webinar titled The U.S. Energy Storage Monitor Fourth Quarter Summary. Today's webinar is being recorded and will be available at www.energystorage.org. Participant lines will be muted throughout the webinar. However, we welcome your questions and comments, which can be submitted at any time via the chat box on the left side of your screen. Following the webinar, you will receive a link to the recording and slides, as well as a brief survey regarding today's topics and topics for future webinars. Your feedback will ensure that ESA continues to provide the highest value information to you and your company. Today's speakers are Brett Simon, Energy Storage Analyst at GTM Research, and Dan Finfoley, who's Senior Analyst at GTM Research. Thank you again for the time, and without further ado, I'll turn it over to Brett to begin today's presentation. Brett?
Great. Thank you, Sonora, for that excellent introduction. Hello, everyone. My name is Brett Simon. I'm an Energy Storage Analyst at GTM Research, and I'll be opening up the webinar. My focus area is behind-the-meter storage, and my colleague Dan Finfoley has a heavier focus on front-of-the-meter storage, so that will inform some of the areas which we're going to discuss today. So without further ado, want to look quickly at the agenda. We're going to start off by talking about some deployment trends in the U.S. energy storage market. Then we'll move on to talking about some various market drivers that have influenced the growth of the market to date. And we'll conclude by talking about our market outlook, that is how we see the U.S. energy storage market growing across the residential, non-residential, and utility scale segments over the next 5 years. So starting off with some historical deployment numbers from the most recent quarter, Q3 2017, we saw the market grow 10% quarter over quarter from 38.2 megawatts in Q2 2017 to 41.8 megawatts in Q3 2017. This is not the greatest quarter over quarter growth, but nevertheless it is still growth. As you can see from some of the bars there, much of the decline came from the non-residential segment, which we'll get into a little more detail later, but that was mostly from a softening of the California market, where previously there had been quite substantial and almost record-breaking deployments in Q2 2017 from California's non-residential market. In Q3 2017, this was down slightly, in part due to some delays on reservations of some SGIP, or Self-Generation Incentive Program funding. But year over year, the market grew 46%. Back in Q3 2016, the market was sitting at about 28.6 megawatts. So really, we are seeing a market that's coming into its own in terms of a year over year growth. And though we don't have final numbers that we can share today from Q4 2017, we are in the process of bringing them together now. And at least preliminarily, in the behind-the-meter market, which is my focus area, we are seeing another quarter-over-quarter jump. So look forward to that coming out in March of this year. And overall, in terms of how the market shook out in Q3 2017, behind-the-meter deployments accounted for 26% of total megawatts deployed, which was actually down from the total share in Q2 2017, which there the share was 42% behind the meter. And again, that's from a few factors. One is that softening of the California non-residential market, as I mentioned, but also Q2 2017 actually saw quite a small front-of-the-meter utility scale amount of deployments. At the end of Q4 2016, the beginning of Q1, or the beginning of 2017 in Q1, we saw a pretty strong market for front-of-the-meter storage, much of that from the Aliso Canyon procurements coming online in California. And so as a result, Q2 saw a slide down, and the front-of-the-meter market is still in the process of building back up from that. So moving on quickly to deployments in megawatt hour terms. Of course, when we talk about the any energy storage market, it's important to identify both megawatt and megawatt hour deployments just to get a real sense of not only what are the size of these systems, but also to try to understand more what the systems are used for. We are seeing a shift that's happened at the end of 2016, early 2017, to some longer duration systems in the utility scale segment, where we previously had shorter duration systems in 2013 through 2015, much of them focused on the PJM market. So we were there looking at shorter duration systems of 15 to 30 minute discharge duration. Now we're seeing systems moving to these longer discharge durations. So overall, we saw 5% year-over-year growth in Q3 2017 in megawatt hour terms, with a total of 40.4 megawatt hours deployed versus 42.5 megawatt hours deployed, 40.4 megawatt hours were deployed in Q3 2016, with 42.5 megawatt hours deployed in Q3 2017. Quarter over quarter, the market dropped 17%. Again, this goes back to some of the softening that we saw in the California market, but also here it's worth noting that earlier in 2017, at the end of 2016, most of the utility scale systems coming online were these 4-hour systems for the Aliso Canyon projects, whereas in the most recent 2 quarters, the systems were seeing discharge durations of less than an hour and among fewer projects. And when we look at the market in megawatt hour terms, the interesting thing is that here the behind the meter market makes up 54% of total deployments, as here, it's worth noting that most behind the meter systems have a discharge duration of at least 2 hours, given some of the services that they need to serve, whether it's something like, backup power or, time of use shifting or peak shaving, which, you can get away with 1 hour, but still generally most of the systems are built for 2 hours. So this is once again down from the Q2 2017 share of 64% behind the meter deployments, where we saw less utility scale capacity deployed in Q2 2017 versus Q3 2017. Nevertheless, it's also worth noting that there was a record-breaking quarter as well for non-residential deployments in Q2 2017, which also accounts for the fact that there was that large 64% behind-the-meter market share. So I've alluded a little bit to what have been some of the leading markets in this most recent quarter, Q3 2017, but I want to go more in depth to talk about what these markets were and why they saw such substantial growth. So when it comes to the residential market, California and Hawaii are the undisputed leaders in the market, with the former California deploying 1.9 megawatts and Hawaii deploying 1.2 megawatts in Q3 2017, which were both record-setting quarters. Much of California's deployments were the direct result of the Self-Generation Incentive Program, which is a program which provides funding for a suite of technologies including storage, and had a new iteration open in May of 2017. So some of the projects from the initial round of SGIP in 2017 started to come online in Q3 of 2017, and thus we saw strong growth in California as a result. In terms of Hawaii, there much of the growth was tied to what's called the Customer Self-Supply Program. At the end of 2015, Hawaii initiated a new program as a successor to its net energy metering program, and effectively had 2 options. Under one called Customer Grid Supply, customers could be compensated for exported solar, but at a lower rate than was previously seen under the old net energy metering program. However, the Customer Grid Supply Program had a cap, and once that cap was reached, which happened back in early 2016, customers were forced to go on what's known as the Customer Self-Supply Program, whereby there's a zero export rule. So customers have the option to either have an undersized solar system or to install some sort of storage system so that they can self-consume excess solar electricity. And this has been a continuous market driver. Again, we don't have numbers we can share yet from Q4 2017, but conversations that I've had with Hawaii-based installers as well as preliminary Hawaii data indicates that the Customer Self-Supply Program is leading to continued growth in this market. And then ranking third in the residential market is what we term all others, which is our catch-all term for markets outside of the 8 individual states and regions that we track. And so individually, those markets are quite small. These are places like, Florida, Georgia, Kentucky, Vermont, Nevada. But collectively, they make up the 3rd largest share of the residential storage market in the U.S. Now, coming to the non-residential market, California here is again the undisputed leader thanks to that Self-Generation Incentive Program, or SGIP program. And here, though we did see a softening in the California market, as I mentioned on my last slide, nevertheless, California is still far and away the leader. Additionally, it's a market where there are attractive opportunities for demand charge management, which has led to a significant amount of non-residential storage deployment. Coming in second for the non-residential market is that all other markets. This is in a variety of states and regions for places including, Connecticut, Florida, and Oregon. These systems have been deployed for a variety of use cases. Demand charge management is still far and away the leading reason, but occasionally there might be some other reasons such as, backup power. And then coming in third is Hawaii, which there we saw some systems deployed as part of a pilot project which is being explored by one of the local utilities. Coming to the utility scale market, the utility scale market had a lower quarter compared to some previous quarters, but nevertheless saw some exciting activity. Texas was the leader in the market, but that was all the result of a single 30-megawatt project, which accounted for 97% of megawatts deployed in Q3 2017. Massachusetts, Tennessee, and Florida also saw deployments in the utility scale segment, but these were much smaller projects compared to Texas's. So no discussion of energy storage markets would be complete without a discussion of technology. So lithium-ion is far and away the leader in the U.S. energy storage market for grid interactive systems with greater than 94% market share, which has been a trend that's continued over the last 12 quarters. So pretty substantial domination there. Lead acid comes in second with a 1.1% market share, which is mostly in the residential market for backup power applications. And then there also was a 1% share by vanadium redox flow. But nevertheless, it's pretty clear that lithium-ion is the leader, and at least in the near term, shows no signs of this stopping. There's no technology that's immediately rising to the fore to offset the gains that are made by lithium-ion. And one of the big reasons for this is that lithium-ion has seen really significant cost declines, and furthermore, this is compounded by the fact that lithium-ion systems are being deployed. So when a customer is looking to develop or deploy a new project, they can look to lithium-ion and say, oh, this is a technology that's reliable. It's been backed by some tier one suppliers. It's been used in a significant number of projects. So there's a greater confidence in lithium-ion compared to some other technologies, which while they may boast lower cost or some other types of advantages, haven't seen the same level of deployment and thus breed some reluctance among financiers and developers. And speaking of financiers, or at least investment, I'd like to take a second to talk about some corporate investments that have happened in some recent times in energy storage. So in Q3 2017, total corporate investments, including venture funding and project finance, amounted to $110.3 million, which is roughly 1/6 the corporate investments of Q3 2016, which was a large quarter with $664.9 million invested. The largest Q3 deal was a $34.7 million investment in Advanced Microgrid Solutions by DBL Investors, Energy Impact Partners, Macquarie Capital, GE Ventures, AGL Energy, Arnold Schwarzenegger, and Southern Company. So, a lot of folks are getting interested in storage, not just, major developers and financiers, but even former governors and terminators. The second largest investment was $30 million, which was in Romeo Power, though this was by undisclosed investors. Project financing is also, important for the growth of the energy storage market. Here, the largest project financing tranche that was raised was $25 million that JLM Energy received from Golden Set Capital Partners, as well as North Sky Alliance Fund. There wasn't any M&A activity in Q3 2017 proper, though it is worth noting that at the end of last year, we did see some M&A activity. In October 2017, Enel announced that they acquired eMotorworks, which is an EV charging specialist, which adds to Enel's overall DER strategy. Earlier in the year, Enel had acquired Demand Energy, which is a storage developer, as well as Enernoc, which they acquired during the past year as well. So NL is building out a larger DER strategy, and so the acquisition of eMotorWorks was another piece of this. And then additionally, in November, Trane announced that they acquired CalMac, who is a thermal storage vendor. So here again, it's heartening to see that a large traditional industry player is thinking about getting into the storage market, whether it's battery storage or, in this case, thermal storage. So everyone likes to talk about what do these systems cost, how are they priced, and so that's going to be the next area I chat about briefly. So when it comes to front-of-the-meter system prices, year over year, we saw some price declines between 3 and 9%. So there have been pretty consistent price declines for 2-hour utility scale systems since late 2014, with medium prices declining 9% year over year from Q3 2016 to Q3 2017. Utility scale system prices for power applications, that's for a 30-minute discharge duration, have seen less significant price declines, which is mostly from some stagnation in PJM's frequency regulation or Reg D market. So we haven't seen as many of these systems deployed, and ergo there hasn't been as much innovation and price pressure there. So there was about a 3% median price decline year over year from Q3 2016 to Q3 2017. And so, given that there have been few new projects in the utility scale segment over the last couple of quarters, prices have held relatively stagnant. Now, when it comes to the behind-the-meter market, the residential market has remained roughly flat. There has been some, reduction that started in 2016, given some higher deployment volumes. Though on the low end, the high and medium prices are remaining flat. Though what I can say, again, talking about the most recent quarter, there has been some additional price pressure. So I would expect that our next pricing report for residential storage will see yet another decline. Additionally, the non-residential market has seen a pretty consistent downward slide. There's been some manufacturing scale-ups and increased deployment volume. So Q3 2017 low prices are 11% below the Q3 2016 low prices, while median prices fell roughly 10% during the same time period. And it's also worth noting as well that there's some proposed residential projects that have been entered into steps 1 and 2 of the new SGIP program, which indicates some additional coming price declines as well in this segment. So with that, let's go and talk about some market drivers. So the behind-the-meter market, or when talking about the U.S. energy storage market, it's always important to discuss policy, given that there's so many policy developments that have direct effects on the market. I've talked a lot about SGIP, which is back to the market. I talked some about the net energy metering reform to customer self-supply that happened in Hawaii. And these types of policies are important for seeing how the market will grow and change over the next few years. So speaking of NEM rules, Nevada, the Nevada PUC saw some adjusted NEM rules. We also saw in Hawaii some new NEM rules that are going to be a successor to customer self-supply and customer grid supply, called Smart Export and Customer Grid Supply Plus, issued in the most recent quarter, as well as some similar new NEM rules across some of the utilities in Hawaii. There were some new tariff programs that were proposed in a few different states, like Arizona, as well as some others that were initiated. And as tariffs change, there's key effects that can happen to behind-the-meter storage, whether it's adding demand charges to residential storage, which can increase the opportunity for demand charge management, or adding time of use rates, which again can create an opportunity for time of use shifting. These can help to bolster the market in different ways. And it's also worth noting as well that there were recently announced some awards under the Massachusetts ACES program, which is going to lead to some exploration of different behind-the-meter energy storage services through a number of projects that are going to be deployed in Massachusetts over the next couple of years. So with that, I would like to turn things over to my colleague Dan Finfoley, who's going to transition and start talking about some of the front-of-the-meter policy and market development.
Thank you very much, Brett. All right, so looking at front-of-the-meter policy and market developments, this is focusing on Q4 2017. There was a lot going on towards the end of last year. Some of the major events did not make it in here, as this was published in early December. I'll sort of try to highlight those as I go through them. But I wanted to pause for a moment and sort of discuss some of the major things that were happening in the U.S. in terms of activity in policy, regulatory development, market rules, etc. First thing to point out is that there is still a lot of activity going on in organized markets, ISOs and RTOs across the country. There are active proceedings in PJM and MISO. These things move, relatively slowly, but we're still seeing a lot of things happen, and New York ISO as well, considering a lot of market changes. The trend that we're starting to see is a movement towards adopting the recommendations from the FERC NOPR of 2016, even without that NOPR directly moving forward yet. There still hasn't been any movement there from FERC. They're obviously been busy with the DOE notice of proposed rulemaking that was proposed, etc. But New York ISO released draft guidelines where they essentially kept pretty close to the recommendations made in that proposed rulemaking. So there is some appetite from the ISOs and RTOs to move forward towards energy storage, and they see this as an opportunity, albeit one with some potential pitfalls and challenges. There is a spectrum of participation, though. On the one end, you have CAISO, a really active market participant, invested obviously with a large amount of investment from regulators, from the CPUC, et cetera. On the other side, you have markets maybe like SPP, where there's more of a follower mentality in those, a fast follower look to, not a whole lot of direct issues that need to be solved. And then ERCOT, there was actually a pretty significant setback where rules that would have really promoted energy storage, this sort of frequency response product, was shot down. ERCOT is a really fascinating example because they have a fast frequency regulation product, and that market is now essentially saturated. One of the major projects that went in Q3 2017 was participating in that market. That has a cap of about 65 megawatts for the regulation up component. That's essentially been reached, and in discussions I've had where I say, a lot of more renewables are coming onto the grid in Texas, obviously a whole lot of wind coming onto the grid. Is that going to cause the frequency regulation requirements to increase, potentially driving up this market? And in actuality, in ERCOT, they've reduced their frequency regulation requirements. That's a bit of a worrying sign for energy storage, I would say. If you're looking at these markets, PJM's Regulation D market, ERCOT's regulation market, as opportunities, it's clear that they're not expanding dramatically, that there's, in fact, compression as the market operators get better at doing what they're doing. There was a flurry of federal activity, 4 different bills introduced in the U.S. Senate that would advance energy storage. Given the current climate of Washington, very little chance that these are sort of going to move forward. The exception to that would, of course, be anything that is dramatically focused on infrastructure. There's a lot of rumblings that this is something that the current administration is really focused on, that could have some bipartisan appeal. In an election year, I wouldn't bet on many things passing, but something that focuses on resilience, hurricane recovery, et cetera, could stand a chance in the federal federal legislature. Florida is an emerging market in a couple of different ways. There was a revised settlement that Duke put out where they're going to install up to 50 megawatts of energy storage as part of a pilot program, along with some EV infrastructure. They're also looking at solar plus storage. This has traditionally been a highly regulated, very slow to adapt market. It's a sunshine state with very little solar, but that attitude is cooling slightly, so I'd expect Florida in the next couple of years will emerge as an interesting market. And Hawaii obviously continues to be a very important market for storage. They've updated their grid modernization plan, highlighting energy storage. Over in New Mexico, we had an RFP out in October seeking alternatives to a coal plant. This is a trend that we're really beginning to see. Natural gas plants, nuclear plants, conventional baseload generation closing, and energy or not moving forward, and then energy storage being considered as an opportunity to essentially take the place of those plants. This brings me to 2 market developments that I wanted to highlight that weren't brought up in this market report, but will be covered in our 2017 year-end review that occurred in late December. One in SCE, Southern California Electric, and one in Pacific Gas and Electric, both in California. there's this emerging trend of natural gas peaker plant and energy storage. This is something that we covered, of course, at our Energy Storage Summit. Shale Khan's keynote with Stephen Lacey covered this topic. We're doing additional research on it now, basically forecasting out when this sort of cost-competitive nature of energy storage is going to make it more viable than a natural gas peaker plant. That mark is coming. It's going to be coming in the next 5, 10, 15 years, not immediately clear. The polling that we conducted at the crowdsourcing panel at the Energy Storage Summit indicated that it would be sometime 10 years plus. But in California, with such an active regulatory climate, it's possible that we've sort of hit that mark now already. And the PG&E and Southern California Electric examples of that are really significant. In SCE, there was a proposed natural gas plant called the Puente plant, which was there was some analysis done on it, looking at potential for storage to take its place. GTM covered that on the editorial side quite a bit. And SCE actually released a new proposed plan to deal with the local capacity resources there, in which the Puente plant would not be needed. Transmission upgrades and energy storage and preferred resources would meet that obligation. In Pacific Gas and Electric, you had the several natural gas plants owned by Calpine, which were sort of given must-run contracts, and those are now potentially CPUC has ordered them to pull back on those. So we'll be covering that in a lot of detail, but this could be the first sort of domino for energy storage in more highly regulated markets competing with natural gas. If you're looking at where this is going to happen moving forward, I would point you towards New England. Obviously, a lot of natural gas dependency up here, and a lot of pipeline constraints, as well as a more active legislature, and New York as well. California, always active. There was a recent Senate bill passed requiring energy storage and integrated resource plans, which I'm going to be talking about in a moment. And then, of course, the one thing that I really wanted to highlight, which didn't seem that big a deal until you really dive into it, is the Portland General Electric announcement. They announced they were going to install 50 to 100 million worth of energy storage, totaling 39 megawatts. And that's a pretty big announcement on its own. 39 megawatts is nothing to sneeze at. $100 million of investment is obviously pretty significant. But the 39 megawatt number is pretty interesting. You might wonder why 39 megawatts. These are split across front of the meter, behind the meter, solar integrated, etc. The Oregon energy storage mandate required all of the utilities in Oregon to install at least 5 megawatt hours of energy storage. So, not a pretty toothless mandate compared to California, Massachusetts, potentially New York. But they actually put an upper cap on it. It was 1% of 2014 peak load, that you couldn't install more storage than that. So you might be asking, what's 1% of Portland General Electric's 2014 peak load? And it's 39 megawatts. So there you go. This is a utility that has hit the upper cap of a mandate. Utilities are outpacing regulators now when it comes to installing energy storage. To me, that's incredibly exciting. That means that utilities are warming up to this much faster than any technology that I can think of in recent history, more than solar, more than demand response or energy efficiency in some cases. They are clearly seeing this as an opportunity, and they're hitting upper caps as opposed to scrambling to meet lower caps. So that's a big deal. California, obviously, we talked about integrated resource plans. Washington, the Utilities and Transportation Commission indicated they have to consider storage and integrated resource plans. So I wanted to make sure that we cover that. In our energy storage monitor, we covered energy storage as a tool in integrated resource plans across the United States. The map on the left here shows states that have an integrated resource plan requirement, and then states that have some sort of long-term planning requirement. And the reason that this is pretty significant is because it's easy to get lost in the minutia of year-over-year growth, quarter-over-quarter growth, and miss the big picture here. And these are states where utilities are required to look at the big picture. They're required to look at their resource plans for the next 20, 30, sometimes more years. And what we're seeing is that utilities are increasingly including storage in these long-term resource plans. So this is a signpost, not one of those 2-year, 5-year signposts, but this is a 30-year signpost that energy storage is a long-term market opportunity that utilities really see as something that could potentially benefit them. What I'd also like to point out is that we're not seeing these sort of IRP participations in only traditional markets. The map on the right shows you in the dark blue where we see storage and integrated resource plans. The light blue, where of course we have mandates, Oregon, California, New York, and Massachusetts so far. And then green distribution planning, state energy plans, which includes, of course, New York and Vermont as well. The dark blue is a pretty diverse range of states. You know, you would be hard-pressed to draw me a line connecting California, Utah, Kentucky, Florida, and Connecticut into some sort of broad, state consortium. These are diverse states with different priorities, and utilities see energy storage as an opportunity in all of them, that they've included them in their integrated resource plans. During the crowdsourced panel Energy Storage Summit, we asked the audience how many utilities are going to be including energy storage in their integrated resource plans, and pretty much everyone agreed it would be more than 40%, and most people said more than 60% of utilities in the United States are going to be looking at this long term. So from North Carolina, Virginia, the entire West Coast, this is something that utilities are really taking seriously. So getting into more detail on some of these integrated resource plans, the specifics and kind of what is involved, there is a range as to how much these utilities are not so much taking this seriously, but investing in it heavily over the next 5, 10, 20, 30 years. On the one hand, you have sort of a grouping on the East Coast, more southeastern states, where they're relatively small amounts of energy storage targets, more on even the pilot scale, if you're talking about Appalachian Power, or in less than 100 megawatts by 2025 or the early 2020s. These seem to be more in the let's build these systems, see how much they do, and then move forward from there kind of phase. These are states where there isn't a lot of energy storage operating at the front of the meter scale, and they really want to see what it's like before they move forward. Of course, in other states where there's a procurement mandate, Massachusetts, California, etc., you're going to see a bit larger amount of energy storage included in these integrated resource plans. We've got a good question here on Massachusetts I should bring up. Isn't Massachusetts an aspirational target, which isn't a mandate? Yes and no. So it is an aspirational target rather than a mandate, but essentially the wording is in there that makes it a mandate even though it's an aspirational mandate. It's a bit tricky to sort of quantify it like that, but it is worth noting that this is an aspirational target for Massachusetts. One of the reasons why I would note that, however, is that here we are looking at the Massachusetts IOUs. They've been mandated here, but many of these utilities have already announced targets that are going to put them above the 200 megawatt hour amount total for Massachusetts within the next 3 to 5 years. What we anticipate in Massachusetts is that they're going to look at this amount and then sort of move forward from there and use this as a stepping stone to a larger target. Brett, you wanted to weigh in on that as well?
Yeah, Dan's absolutely right. And kind of to build in a little more detail off his point, the mandate was set up in such a way that the Massachusetts Department of Energy Resources is planning to revisit those targets. Likely they'll start that process either at the end of this year or early next to basically assess, was 200 megawatts the right level? Should this level be raised? Should we, change the mechanism? So that's something to keep an eye on for everyone who is thinking about the future of storage in Massachusetts. That's all I want to say. Dan, please.
Thank you so much. So after you get out of those bubbles, you're in the southwestern United States where utilities are really investing heavily, or I shouldn't say investing heavily. They want to invest heavily. They're including storage in their integrated resource plans in a big way. Obviously, the numbers here are pretty significant. New Mexico, 497 megawatts after 2022, with potentially more prior to 2022. Obviously, you have plenty of megawatts in the integrated resource or the long-term planning for California utilities, et cetera. The one I really wanted to draw everyone's attention to, which I'm really excited about, is Arizona Public Service, 503 megawatts by 2032. So first of all, this is a relatively long time frame, 2032, I guess only 14 years out, 15 years when this was announced. But the number, 503 megawatts, is significant. But even more significant about that is the context surrounding that number. When that number was announced, Arizona Public Service had only 4 megawatts of installed capacity of energy storage front of the meter, which means that by 2032, they wanted to install more than 100 times the amount of energy storage that they had on the system. If you actually go through and read Arizona Public Service's Integrated Resource Planning document, they looked over 7 different portfolios. One of them was high renewable energy. One of them was a couple of different options. In all 7 of those portfolios, they had 503 megawatts of energy storage at least. And in 2 of those portfolios, they actually had more than a gigawatt of energy storage. So they went with one of the ones that had 503 megawatts, but it's worth noting that Arizona had at least 500 megawatts of energy storage across all of their portfolios they were examining for their integrated resource plans. Key takeaway here, utilities are taking this seriously. They're moving fast, but also they're planning long term. So I would definitely keep your eye on this trend over the next year and I guess over the next 15 years as well. So shifting over to our outlook, I wanted to remind everybody to please submit your questions into the participant feedback box in the bottom left. We'd love to answer your questions. Obviously, United States focused, but anything that comes up, we'd love to talk about it. So going through our outlook, I want to bring up our pipeline. Essentially what this pipeline is our tracking of all major announced projects across interconnection queues, major announcements and press releases, FERC filings, etc. We consolidate all of that to create our sort of full pipeline. And I want to draw your attention to the distinction between a pipeline and a forecast. This pipeline includes a variety of sort of absurdly large projects that are included in interconnection queues, which have a very small chance of actually moving forward. The reason we include them here is to give you an idea of how much we're actually seeing in the market. So for instance, if you're participating in an RFP and you put in an IRP filing for that, if you're one of 10 bidders for a 20 megawatt project, that project might have 200 megawatts of interconnection queues associated with it. So that's going to distort the numbers. But what we're seeing here, the reason I wanted to include this is because it shows you interest in markets over time and how it's changing and evolving and adapting. Obviously, the California pipeline is increasing in bursts right around Q2 of each year. That's when the latest cluster applications for the interconnection queues come in. But we're also seeing movement and sort of dynamic adjustment over time. Arizona, I would take with a very large grain of salt. That number is based on primarily a couple of very large projects included in the CAISO interconnection queue, which technically involves Arizona. So Arizona obviously is going to be a pretty significant market, but that pipeline number jump should be taken with a big grain of salt. There was actually a compression in the amount of pipeline projects that we were tracking in the all others category, PJM, a couple others. PJM as a market has sort of fallen on hard times because of the Regulation D changes so much that we're actually seeing projects decommissioning rather than being commissioned in PJM these days. In Texas, that's driven by a couple of large compressed air projects, but we're seeing a lot of interest in that regulation market, which is now pretty saturated as well. I would keep your eyes peeled on Massachusetts for our 2017 year in review energy storage monitor. Since the mandate was announced, a lot of other projects have been announced, and specifically they're moving through the interconnection queue process with some pretty sizable projects, a lot of them paired with solar. So definitely keep your eyes on that. Going through our forecast from December, we saw 2016, 230 megawatts of projects installed. We'll be sending out our revised 2017 number. In December, we had a couple of projects that we're really hoping to get squeezed in by the end of Q4 2017. A lot of those did not make it and are going to be moving into the Q1, Q2 of 2018. So expect that number to fall for our next energy storage monitor. We expect behind-the-meter deployments, which is, of course, residential plus non-residential, to be half the market by 2021, in the market to grow up to 2.5 gigawatts in the U.S. by 2022. I'll point out that this was a really fascinating topic at the Energy Storage Summit. When we asked the audience this question, when will behind-the-meter overtake front-of-the-meter energy storage deployments? We got a lot of pushback on this forecast. Several people think that behind-the-meter simply isn't maturing fast enough. Other people believe that utility scale is simply going to grow so much that it will overshadow the growth in behind-the-meter systems. So there were actually only, I think, fewer than 40% of people who thought that it would overtake it within this 5-year time frame that GTM research sees. So this is going to be a topic that I want to follow closely in 2018, how the front-of-the-meter market scales and adjusts, especially coming off of the big deployment years in 2016, 2017 with the Aliso Canyon procurements, some other large projects coming online. This is going to be something to watch very closely. And of course, we'll be releasing updated forecasts with our Energy Storage Monitor Year in Review in March, as Brett mentioned. Looking at the market from a dollars perspective, you can see that the residential segment is one of the big winners over the next 5 years. Currently only contributes about 4% of the revenue from 2016, grew to potentially about 10% this year. We'll have final numbers on that in March, of course. But this is going to grow to 38% by 2022. The annual market will be $1.2 billion, and residential is going to make up, more than $400 million of that. So that's a really big deal. Residential storage is a huge opportunity long term, and yeah, we're really excited to see this trend play out over the next 5 years. In terms of dollar terms, $1.2 billion. It's exciting, and these numbers will be adjusted, of course, as well over the coming. These will be adjusted over the coming months and years, etc. But that simple number, that residential energy storage, is going to be a 1.2 billion market, and the energy storage itself will be a 3.1 billion market. Is just one of those numbers that I can't get enough of. Energy storage. Front of the meter, I feel like, has had a bit of its time in the sun in terms of frequency regulation, capacity, utility scale investment. So I'm really excited to see what happens with residential energy storage over the next couple of years. So I'll draw your attention really quickly to the contents of our full report for the Energy Storage Monitor. We did have a in-focus breakout on energy storage and integrated resource plans. So if you're interested in that, that's available in the full report. And the full report also includes much deeper dives into deployments, technology trends, policy, etc. So with that, thank you very much. Brett and I would love to take your questions. Please enter them into the participant feedback box in the bottom left.
It looks like we already have 2, Dan, so we can address those.
Beautiful.
The first one is saying price for complete system slide 8. So I'm assuming what Alberto, what you're asking here is what's included in this. And yeah, if I wasn't clear, I apologize. So this is the price of a fully installed system. The assumption is that the system is lithium-ion based. Additionally, that there's no special interconnection requirement costs or land cost for these systems. And the discharge duration, as it says up there, is 2 hours at the top, 30 minutes on the bottom, and then for the behind-the-meter systems there, we are assuming 2 hours as well. And then to your second question, how many years are based the IRPs shown in the slide for? I think, Dan, you probably can answer that one.
So regarding the IRP question, not sure if I entirely understand your question, Alberto, so maybe we could rephrase it. But the idea here of how many years, let me actually pull up the IRPs here so we can look at, let's talk about the timeline for a moment here. The IRPs vary pretty significantly in terms of how far ahead they're looking, and even within the IRP they can set different goals for specific technologies and deployments by specific years. So I would point out some of the long-tailed IRPs, which are the 2032s from TEP and APS, versus some of the shorter duration ones. Duke's 2021 75 megawatt target and FPL's 2020 megawatt target. Hawaii, of course, has a pretty significant target by 2020 as part of its grid modernization plan as well. So yeah, there is a definite, there's a lot of diversity in terms of how long a tail these things have, how significant it's going to be short-term versus long-term. In general, though, I would simply point out that this is something that's really moving forward. Utilities are very excited to make this happen, and they see it as an opportunity as opposed to a threat. Now, whether if you're perhaps in the behind-the-meter space, that's a threat to you. If utilities start to get a little bit more possessive of these energy storage projects, they want to own them themselves, control the assets themselves as opposed to rely on third parties to do it as well. That could be something that I would worry about a little bit as behind-the-meter trends move forward. So I hope that answers your question, Alberto.
Let's see, we got any other
Great.
questions?
Thanks so much, guys. I just wanted to. It looks like we're still waiting for a couple questions to come in. Oh, another one just came in as I started making an announcement. If you wanted to handle that one.
Sure. Let's see. California's 3IUs are crafting their distribution resource plans. A key change is CPUC's Integration Capacity Analysis Working Group, the Locational Net Benefits Analysis Working Group, which are identifying optimal locations and values for the deployment of DERs. Do you see this becoming a trend elsewhere? Distribution resource plans becoming more important, dominant than IRPs?
Wow, good question. Distribution resource plans versus integrated resource plans. They're very different sort of planning functionalities, and whether I see one or the other becoming more important over time, I guess depends on your perception of whether you see centralized storage or distributed storage being more of an opportunity long term. So I would say over the short term, perhaps an integrated resource plan indicates more interest from the utility. But if you see energy moving towards a more distributed system in general, where you have much more customer or load-sited generation, storage, etc., much more distributed energy, then I would say that these sort of working groups would play a much more significant role than that. When you're identifying optimal values, optimal locations for DERs, I think that energy storage is playing an increasing role in that. There was some projects installed in 2017 looking in North Carolina, the Brunswick Municipal Electric Co-op, where they essentially installed a whole bunch of distributed solar plus storage providing dispatchable solar, but because what's the best way of sort of discussing this? It's hard to sort of get investors for a 500 kilowatt project. Instead, they did a 6 megawatt, 12 megawatt hour project, but they split it over 12 different sites, and they identified those individual sites that would be most beneficial for the grid, for their customers, provide the most value. That kind of process can pay big dividends for storage, because then you're talking about storage providing, a surgical sort of solution here. That gets into the deferral question, which is going to be a really exciting opportunity over the next 5 years moving forward, where, when you're looking at infrastructure, if you can see energy storage as an infrastructure asset, as opposed to just a generation or load asset, that is something that has the potential to expand the market out, further than just the gigawatt scale into multiple gigawatts if that really takes off, especially in a lot of markets where there's a lot of constraint and a lot of regulations, such as New York, specifically New York City, et cetera. So yeah, I hope that gets into that a little bit. I'd love to follow up with you about it, looking at these distribution resource plans. I think that's something that could definitely be covered in more detail. Thank you. All right. Any other questions from our audience? Of course, our emails are here at the back. We'd love to connect with you in person and get your feedback on what you're thinking for Q3 2017 and, of course, Q4 2017 and 2017 in general as we build out our next energy storage monitor coming out in March. I also want to put in a quick plug because we were talking about system price trends. Our colleague Mitali Gupta, our sort of upstream analyst, is putting together a full report on storage system price trends from the bottom up, balance of system, battery, etc. So any interest in that report should be coming out later this month or into February.
Great. Thank you so much, guys. We have a couple of more minutes, so there's still plenty of time to submit questions. And as we wait for a couple of questions to come in, I'll give a brief update about some of our upcoming webinar. On January 31st, we'll have the third and final installation of the Energy Storage Safety and Compliance series with the webinar titled Hazard Analysis within Energy Storage Systems that will be presented by Robert Steele, who's representing Intratec. For ESA members, you can find information about how to register for these webinars in the Events tab of the Members Only area of the ESA website. Okay, still waiting for some questions to come in. I just wanted to do a quick note to member companies on the line. Please be sure to update your contacts with ESA. You can do that by visiting www.energystorage.org/members to let us know if you have any new employees, a change of address, or any new updated information. We need this information because we like to make sure that all of our members can receive timely updates and information from ESA. I'd also like to invite everyone to plan to attend the 2018 Energy Storage Policy Forum, which is being held on February 14th in Washington, D.C. in conjunction, well, not in conjunction, this is during the same week as the NARUC winter meetings. Just take advantage of this once-in-a-year opportunity to network with policymakers and advocates and engage in a day-long discussion on some state and federal policies, wholesale market design, and the industry's advocacy efforts. So we really invite you all to plan to attend that. You can find information at energystorage.org/policyforum. And last but not least, we, as you know, are hosting our 2018 annual conference and expo right in your backyard, Dan and Brett, in Boston. We're excited to be there, and we invite everyone to plan to attend. We have some special early bird rates through January 31st, so go ahead and take advantage of those deals. You can find information about it at www.energystorage.org/ready-for-business, because energy storage is proven and ready for business. Dan, I don't see any additional questions in the chat box, so if you'd like to issue some closing remarks, please feel free. And
yeah, absolutely. Thank you so much, Nora. Yes, everybody, definitely come up to Boston. It's going to be a great time. Can't wait to have it in our own backyard. Obviously, the event is a must-go-to every year, but because it's in Boston, I feel this one in particular is definitely the one that you have to go to. Yeah, really looking forward to seeing everybody there. It's going to be a great event. I would just say, continue to watch this space. There's going to be a lot of big news coming out on energy storage in the next couple of months. There's a lot of issues that still need to be worked through from the policy side, new business models that are emerging, front of the meter and behind the meter, mergers and acquisitions, rebranding, big stuff happening all the time. So I would simply say, keep watching, and if I had one piece of advice for you, it would be to read the filing documents on the CPUC decision on the PG&E Calpine plants regarding that natural gas, and the SCE decision to pursue energy storage instead of potentially building out that Puente natural gas plant. These are big deals. These are, if you had told the people I feel on this webinar that, back in 2014, oh yeah, in 2017 they're going to be looking at energy storage as a preferred resource instead of a natural gas plant, I would have thought you were crazy if you told me that. And I think a lot of people would agree with me here. That's the reality that we're living in now. This energy storage is definitely ready for business, and utilities are agreeing. So, yeah, looking forward to seeing everybody in 2018 for the ESA Energy Storage event. Aside from that, really thank you for being on the call. Feel free to follow up directly with us.
yes, thank you, everyone, and have a great day. Thank you so much. Bye-bye.
Thanks, everyone. Bye.